it is raining here in Georgia, and it's graduation night, and it's pouring down, and I'm like, oh, we're supposed to have it out on the football field. I don't want to go in the gym and have it all rain. I don't know, man. I need the rain to subside. Is it raining at your house like it's raining at mine? Oh, by the way, I still love you. Ed, surely you like that song. Ed, did you give me a Ed, you laughed. I said it's a tearjerker. That's a great song. Praise the Lord. All right. So we're down 0.36%. Wang. Now, look at this, y'all. Here's what I want you to see. Does VWAP matter? Yeah. Does opening range matter? Yeah. Does all this stuff matter? Yeah. In the big scheme of things, I guess it does. But what's this? Watch our linear regression channel. Check this stuff out. Remember that line that I drew the other day, support and resistance? Look at there. It was resistance, and now resistance becomes support. So, now these lines break occasionally, and when they break, then they're no longer good. But until the meantime, we're looking at a little bit of support right here. So we'll see, it could go down, but I still think that this chart is kind of bullish. We're above the 50, 100, and 200-day moving averages. We got a little support right here. So kind of bullish there. Let's see what our big green monster looks like. Hey, big green monster has done the unthinkable, and it's filling in some of these gaps like we think that it might. So now, remember, I was like, well, we may just keep going up, but it'll be interesting to see what happens here, right? Is it going to remain overbought as it is now and come back down into this area? Or will it decide that indeed this area where we're at on the linear regression chart is indeed support and pop back up into here? So in other words, I'm covering my bases. If it ain't going up, it's going down. All right, let's see how we're doing today. We're going to have some deep thoughts today. Deep thoughts. 37,354. Let's see how that means. 37,354. Down a little bit. 37,354. No big deal, right? We're down just a little bit. Yes. All right, let's look at our little, I got some thoughts today. So deltas are 31. Our theta is 60, 3160. Look at this. Isn't this beautiful? Where you're looking at, the thing in the middle and everything. So 3160, let's put that in. 3160. Yeah, we got a lot of positive deltas. How do we do that? Oh my gosh, look at this. We're at 0.16. All right, so we're 17 there, and our buying power now is at, go to the right one, Bob. Our buying power is 85.53. So how's that looking? 85.53. Okay, so we're using 22% of our buying power, but look at that nice, beautiful theta. So, you're sitting there going, we got a binary event coming up where we may have a default on U.S. debt. You're a little worried about that. All you got to do is come in here and say, yeah, I'm worried about that. I'm scared to death. So go into your positions tab and you see what you got. Let's see, positions here. What is this? Let me see these over here. Hard to tell. So we got some 24-day stuff. 3580, 3690 is a long. 36. All you got to do, it's so hard telling what's what. Let's see, 3675, or that's a put debit spread. 3960, 3910, that's a put debit spread. 3920, 3870, that's a put debit spread. 3900, 3850, that's a put debit spread. 3890, 3840, that's a put debit spread. 3690, what the crap was that? 3610. So these are all naked puts right here. So what you could do if you wanted to, and remember, my plan is, yes, deep thoughts from Sweet Bobby. All right, so here we go. Let's close one of these. All right, let's just kind of, close the position. Let's see if we can get it for 350 to get out of that. Come on, baby. Let daddy go. Let me go home. Let's see, here we go. All right, we're out of that. So that brought our theta down to 58. Let's maybe close one more. You want to? Let's close these two here, these 3600s. Close those. Just pruning down a little bit. Nothing to see here. 375. All right, let's get out of those. And again, this is the freehand account. Y'all can certainly freehand an account if you want to. Not going to hurt my feelings at all. Let's see if we can get up to 380. There we go. We're out of that. So now we brought our theta down to 54. Let's look over here. 54. We dropped $6 a theta. Yeah, okay. I like that a little better, right? So we're still going up 40, 48, 49, 54. Everything looks really, really good. And that should have brought our buying power down just a little bit. All right, nothing else to do here. We're done. Close it. Go enjoy your day. Play some golf or play some street hockey or whatever it is that, shuffleboard like Ed does when he goes on vacation. Ed's always playing shuffleboard. So that's fine too. So let's go over here. Let's see how our little account's doing over here. We'll figure it's down to a little bit. Ed, we know you're a shuffleboard player. 85,720. 85,720. And I've got thoughts today. I can't wait to share them. 85,720. Okay. So we're down just a bit, but we're not down 0.33% like the market is. And 523.23 down just a little bit. Rico and the band's got some static in there. They got to figure that out. All right, so let's see what we're doing here. 36 minus 15. Oh my gosh, 36 minus 15 is what? Oh my gosh, that's like, I can't do it. I'm going to do it in my head. Is that like 11? No, that'd be 26. 21, right? 21 and 15 is 36. So 21.89. Let's see how that looks. 21.89. Oh boy, 21. And we got our theta up to 89. Oh, be still. Look at there. Beautiful. VIX at 17. And buying power usage is a measly $19,000. Beautiful. Now we can go over here and see if it says that any of our trades need to be taken off. Now it doesn't right now. Here's what I want to show you. So how many nakeds do we have in the 111s? We've got 2 nakeds here. Wait a minute. Okay, yeah, 2 nakeds here. We got 2 nakeds there. So that's 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 nakeds. Oh, Lord, we got 6 of them. Well, I forgot what was that? Whatever, 16 plus 6 is what? 22. And then 23 is 4, 5, 6. We got 26 nakeds going into a binary event. All right, here's where I wanted to get deep with y'all. Ed was a shuffleboard champ of 1997. I'd say more like 77. That's probably when Ed was in his prime shuffleboard. So let's go to the Analyze tab. You want to? And let's look at our MES positions, which are all 111s. And this is what came to me last night, and I think you'll like it. All right, so we want to do single symbol. I just want to show the single symbol and hide simulations. Okay, good. So we're just showing our stuff here. Let's move this to today. All right, so here we are today. Okay, we're down $62 on the day. If we go down 5%, we're going to be down $1,400. We're going to be down $8,000. We're going to be down $33,000. All right, but if you pump in volatility, things could get much worse. So here's the 20% down move, right? So watch what could potentially happen. If the volatility gets to 47 or 57%, we're down $52,000 to $58,000. So see, 33 looks bad, right, on these positions, but it's much worse with the volatility. Okay, now let's change the symbol and let's look at our credit spreads that we've got, put and debits, and see what those look like. So you see with our ES positions, it says a 20% down move is going to, or 12% down, where this is where the broker looks for their margin. It's going to be 7,000 down and 17, 7 and 17. All right, when we go down to the 20% down here, though, watch what happens. Do y'all see that? How the 17,000 is still 17,000? Do you see that the defined risk has basically killed the volatility increase in our losses? So it brought me to an interesting thing, and I don't know about y'all, but I lie awake at night and I think about these. I ponder. And I pondered a couple of things, and I started thinking about Karen, the super trader, who I love and adore. And I sent her a message last night. I hadn't heard back from her, but I hope she's doing well. And what she was able to do when she first started out, when she was making the big millions of dollars, she was effectively doing strangles. But she was doing each side separately, right? She'd manage her puts separately from her calls. Okay. And then whatever happened with Karen, she didn't blow up. She didn't lose money for her clients. But whatever happened probably was an IV issue where IV spiked up and caused her some harm where she had to roll out those positions. So as you remember, the last time that we talked to Karen, she is back to doing iron condors. And last year, 2022, she tells us that she doubled her count, right? So she had 100% plus return last year doing iron condors. So the fact that you're doing the credit spread, y'all, is mitigating the effect that we had with the Vomageddon in March. So that's why we were like, especially in the lower volatility environments, to me, the defined risk just makes more sense. So we're going into a binary event. If you are scared, what I would start doing is I would start pairing off your 111s. I would start closing the naked component of that trade in the event that these morons can't get this straddled and straightened out. That's where your risk is. And it's not so much in the defined risk trade as it is in the. So I almost had a epiphany last night as I'm lying in bed. And I said, well, Bobby, should I go into the account knowing what we now know and what we've discovered in the last couple of weeks? Should I go in here and should I say, hey, screw this? I'm at 52% here. I'm at 50% here. Should I pair off some of this risk and replace it with defined risk? Now, you see, I'm going into a binary event. Y'all, there ain't nothing. There ain't a thing that I couldn't close on the naked position and not be profitable. They're all profitable. Do I want to be a hero? Because remember, I did say that the upside risk, the risk is to the upside. I think once they get a deal in place, that you're going to see an initial knee-jerk reaction of the market going up. So you're probably going to get, if you've got calls, you're going to get tested on your calls. But if the morons don't get it done, where's the bigger risk? The bigger risk is definitely to the downside, because all Hades is going to scrape loose if we default on our debt. It really is, at least initially, until they'll get it fixed out, but you're going to have to survive some pain. So last night I was thinking, Bobby, close those nakeds. Don't be a hero. Don't be like, because I always say news is noise. Don't worry about the news. And I'm not saying that we need to necessarily worry about the news, but at the same time, it's hard to go into this binary event and not think that, hey, we do have downside risk as well. Is it better to take away the volatility impact of that risk at this time when all of my positions are favorable? Now, you could take them off and just go into the binary event with just your put debit spreads. You certainly can do that. The only problem is you're going to have negative theta and your account's going to suffer somewhat. But my thought process was take off that risk of the naked positions and allow the defined risk trades to replace my theta. Ed, I know you've got something to say on this, so we'll turn the floor over to Ed.
I do have some questions and then some thoughts. I was waiting for you to finish it all. So a couple things, and now we're treading further into the discretionary part of portfolio management, which, as everyone knows, I'm not against. I try to be as mechanical as possible, but then, for better or worse, I do sprinkle in some discretionary thought from time to time. I can't help it. So in this case, I like the options you're mentioning. I mean, you can do nothing. You can pare down some risk. You could take all your risk off and leave all the protection on. Another thing I want to throw as an option is you could add up first you can pair off whatever nakeds you don't really want anymore. And if you got some that I didn't really see your prices, they all look kind of, okay, so there you're up 50%. So that was a $12 strike or so when you sold it, or $12.50, and now it's $6. So you don't have gobs of profit here, but you could add up all those premiums, like the 6 plus the 925 plus the 825 plus the 920, and then figure out, like, do I want to just take all of that off? Do I want to take part of it off? Do I want to take some of these smaller ones off, like maybe the 6 and the 9, and then go sell a 15 somewhere and just have one contract instead of two? Now you're doing it at a higher delta, but you are reducing the absolute number of contracts you have. Or you could add up all your put debit spread and other hedges in the account and see what that pointage, how many points that is, and just leave that amount of points on so that you don't have the negative theta. You basically have little to no theta. So you'd be kind of coasting along through this event, and you could take it to zero, like cost of protection, you know, which is a negative, plus your negative, your net, your naked put premium, and zero that out or leave it slightly positive, so you could have some positive theta. You know, and I appreciate you bringing all this up, because it goes back to what we always talk about. We're always trying to be relatively mechanical. Some of us are more mechanical than others. Some of us are very mechanical, which I'm usually somewhat envious of, because I just can't seem to get 100% mechanical. And you know, I'm assuming some people are very discretionary about what they're doing here. And, you know, I personally think the likelihood of an extended default is near zero, because it pretty much is. But
and what's the latest that you're hearing? I know your ear is to the ground on that. What's going on?
It's the same crap every day. Both sides come out and they either say we're getting close, or one side says we're getting close and the other one says we're not, or they both say we're not. So, you know, from what I understand, there is once they pass this thing, there's a little bit of a digestion period where it's going to take them time to implement it. And so I don't know for sure. I'd welcome other people's thoughts, but it seems to me that if they don't get something done relatively soon, we're going to probably scoot into this thing and have at least a partial shutdown for a few days. But I mean, that's strictly a guess. I really don't know. Yeah, I just saw Brett's post about we're having a little sell program, and it just took a nice dip down. I don't know if that's news generated or not. I don't see anything. Anyway, yada, yada, yada. I think this is a situation where people have to do what they're individually comfortable with. And I don't think anyone has to clear their book. I think, you know, your initial suggestion of paring down to your comfort level, and if you're comfortable where you are, stay where you are. If you're thinking even more positively, like you kind of mentioned, Bobby, if they reach a resolution, the market's going to at least pop initially. And I'm not sure that's my mindset or not. I think it would pop initially. I don't know if it's going to be a 5-minute pop or a 2-day pop, followed by I don't know what. You know, rates have been going up, up, up. In the last week and a half or so. There's been more digestion of future rate hikes ahead. And of course, there's more rate build up on the short end because more people are worried about a default and they want to be extra compensated unless, assuming their 4-week T-bill maybe becomes a 6-week T-bill, they don't want to earn nothing for the extra 2 weeks or whatever the government shut down. So they're demanding a higher rate on that short-term stuff, which you'll see today when you go out and do your T-bills. Blah, 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 blah. So, I mean, my thought is there are different courses of action. Just to summarize, you can leave things alone. You can take off all your risk and leave all your protection, or you can take off all your risk up to the point where your protection is paid for. So you're kind of throttling along at close to zero, which still will create some market volatility to the downside. In that if you have 40 or if you have 60 points of short premium and you have say 30 points of protection on, and if you take it down to 30 points and you're at zero, you still have the nakeds on. They're going to cause you some downside action if it's a severe jolt to the market. So it's not a perfect solution. So I think we all kind of have to figure out what that perfect balance is. I can't really say what it is.
Well, and I'll say this, I'm not scared. I mean, there's no fear here, but I just want to do what's prudent for the account. I mean, it's not that I fear it.
And that's the other thing. Yeah. And I'm glad you said that, because we are little tiny entities in the market. We are not in a position, in my opinion, to dig in our heels and cross our arms and stand there big and proud, like, the Ajax man or whatever. And that probably dates me a little, but we are not that. And I don't think we all have to stand there like big, brave, daring the market to, mess with us. I think everyone has to do what they're comfortable with. So I'm personally throttling medium right now. If I continue, and I think I said this earlier, I know I've posted it. If I continue with my current scheduling, I will be at near full book at the end of the month. And I'm not doing that. I don't want to be more than 2/3 full, because if there is an event and there's some, buying power back up, I want to have some resources to absorb that. And if I'm lucky, put on more risk at that time. So that's kind of where I am.
Yeah. But I could easily almost see myself. Let's see, I've got 72 theta coming from my naked puts. My put debit spread, my put credit spreads, I got 20 coming from. My call spreads has got 33 with much less positions. I almost could see me taking the theta out of the nakeds, and placing them into the spreads. I could easily see me doing that. And I very well may do that. Just to, I think, because we've learned an important lesson, is that the volatility of a potential move like this in a low volatility environment doesn't have quite the effect that it has on negative positions, on naked positions. So, for now, for our time together, I could easily see me closing this one, getting out of it, Can I get out for $6? Let's see, probably not. It's going to make me go back, go up to 6 1/4, but just taking off a little bit of risk. Oh man, it's going to make me go up to 6 1/4. Okay, 6 1/4, 650. Let's just take one off for now till I decide.
And as we've said before, Bobby, like this is a binary event of huge proportion. We don't often get to see turbulence ahead of time. And this is a situation where we do see potential major turbulence. What are the odds of that? I can't predict that, but it does appear that the market is not too worried about it.
Right. Market doesn't seem worried at all.
And that's why, I'm not sure what's going to happen after this thing's resolved. If it's resolved today or tomorrow, I would expect a 1 or 2% pop, but then I don't know what, because at that point, I posted yesterday, what's the market going to freak out about? What's it going to focus on next? And it could focus on the rise in interest rates that we've had in the last couple of weeks, unless those rates, plunge and bond prices rally on this quote, good news that they've extended the debt limit, whatever. It is good news, of course, that they do it, but, the overall trend of our national debt is not beneficial to any of us in the long run. So just more of my little thoughts coming out.
Brett, you're funny. Is it still Ajax men, or did they change it to woman? Or they Ajax, they, them? Yeah, I'm not sure what Ajax men's pronouns are. Oh my gosh. So, I could see me doing that today. Closing these things out, go ahead and taking the profit, not trying to be a hero. And like Ed said, rarely do we have these binary events, so clearly in our focus. Now, remember, it was during COVID that I closed everything and went totally to the Sweet Bobby hedge. And that's where I made a little small fortune, doing that, over 200% return in just a couple of weeks there. So it's not that I haven't acted on binary events before. And I thought that was going to be a serious binary event that could potentially be harmful, and it paid off for me. I could do the same thing in this instance. It may not pay off, but it's telecast for us. It's televised for us. It's right in front of us. And I can't imagine them going to their little Memorial Day things without having a deal done and saying, oh, yeah, for the first time ever, we, the United States, are going to default on debt. I can't imagine them not getting it done. But at the same time, I couldn't imagine COVID shutting down the country either. You know, that never happened in my lifetime. My grandmother would tell me about the Hong Kong flu. She almost died of Hong Kong flu. And I thought, what is she talking about? You know, Mama is crazy. She's out of her mind. And she remembers Hong Kong flu almost got her. So, you know, these things happen. I can be a hero, hold my positions, or I can pare down a little bit. And I think that's what I'm going to do. Probably not going to do it in front of y'all and close everything now. But I think as I meditate and study on it, that's exactly what I might do. And I might replace them with a more defined risk trade that will not have a negative effect if volatility really, really spikes, since volatility is now low. Yeah, I'm going to do T-bills today.
And then,
Thanks
Bob, you
reminding
know, this is looks like a classic case of, you know, missed money versus lost money.
Mhm.
I mean, if all goes well and they have a resolution tomorrow and the market pops and then it hangs up and it goes on an extended 5 or 8% rally from there, you know, the account's not going to have as much profit as it would otherwise.
Absolutely.
So it's not a fear greed thing, but it is kind of a missed money, lost money scenario. And again, that's up to each person and their own risk tolerance to me. So
Yeah. There's no right answer or wrong answer, y'all. It's just you got to do what you got to do. But rarely do we have an event, you know, that's scripted for us that there could be two-sided action. And you want to be a hero and hold your positions, or do you want to, you know, do you want to just take a little bit off the top? I got nothing. You could do either, and I think you're probably going to be fine in either situation. But you know, where's my real risk? My real risk is to the downside. That's where my real utter risk is. You know, you go back to the Analyze tab, and on this account, Analyze tab, MES, you know, $35,000 account down 22,000. But if you get some volatility in there, you're down 41,000 if we had a huge move to the downside, right? You know, that's kind of crippling for this account. So why would I not take off a little bit of risk to the downside? Is Evan here today? I like hearing from the angel in one ear. I've already heard from Satan himself, Ed. Ed, you know, I say that lovingly. Is Evan not here today?
of course, I don't see the angel.
Where's the angel at today? He's taking a break. Anyone else got any comments on it at all? What are y'all doing? I'd love to know what you guys are doing. Are y'all? It's not that I'm scared, but it's just like I need to put my account in the best possible situation to hang around from this event. Brett is short. Okay, so you're short the market, overall market. Gotcha. Nothing wrong with that. SWVXX and T, but what the hell is SWVXX, man? What is that? What are you doing in T-bills? I don't blame you there either. So we got 10 and 47 in this account, mutual fund. Okay. 10 and 47. Let's see how this account's looking. We're down just a little bit, down $56. 10 and what did I say, 47? 10 and 47. Okay, I like my deltas. I like my thetas. And we are using how much buying power? 62 plus 11 is 7,300. Okay, 20%. Okay, that looks good too. Let's look over here if anything says I need to manage it. It does not. All right, so let's go to the T-bills. Let's buy our T-bills. I need to have this thing, let's see, TD Ameritrade login. I need to have that. Oh man, I just gave money to Google. Why did I do that? All right, so let's see how many of these puppies we got to get. So over here, Matt's into the T-bills now. I like that. So we got a T-bill calculator in our IRA. I should buy 9. I'm using up to 50% of my capital. I'm going to buy 9 over here. So let's go to that. Oh, come on, little thing. Look at that. Isn't that pretty? Isn't that gorgeous? We're right in the middle. This is what James does every day. Is James in here today? James, I almost texted you last night if James is not here, because I was like, oh my gosh, that's why Karen had her problems. Volatility hurt her. If she had been in iron condors or credit spreads, she would not have felt the pain. Now, she would have been able to be safer because you can get your positions out farther. But at the same time, why did they not let me log in? At the same time, she dealt with that volatility risk. So let's see, down to 3, we got to do 5 of these. So I do trade, fixed income, new issues, CDs, treasury auctions, and I'm going to do, what did it say, 9? So I'm going to do 4 of those. 4 there, review order, and place it. And then we're going to go trade. And Ed's going further out because he's making sure that he's not going to be defaulted on. That's fine too. That's fine too. So we did 4 of those. So let's do 5 of these, 8 weeks. So I can get a little bit better rate most of the time anyway. 5 and 4 is 9. Review order. Place order. All right, now let's go to the other account, the little account. And over here it says T-bills. I can buy 6 of them. All right. So let's get 6 of them. All right, so let's go to that account, which is this one. I got 7 messages. I wonder what they're saying. Bobby, you got a margin call. Bobby, you need to quit trading. You're horrible. Bobby, you're this, you're that. Ed's posted a thing that shows you all the little returns and stuff. I rarely look at it, but Ed, he's good because he'll go, oh man, look at this. This is paying so much more than that. And I'm just like, whatever. I got award ceremonies to go to, with my kids. I mean, there were all kind of awards situations. Okay, so let's go Crimson 203, trade, fixed income, new issues, CD, treasury, new issues, treasury auction. So we're going to do 3 of these. I wish they let them do all at the same time, but I can't do it. 3 of those. And 3 of the 8 weeks. Trade, fixed income, new issues. Here we go. And let's go treasury auctions. And we'll do 3 of the 8 weeks. 8 weeks. 3. Beautiful. Okay. What are y'all saying here? Ovi says defining the risk minimizes the effects Greeks have on the positions as a long swing in the opposite direction, which makes them move very slowly, but they move. Typical traders want to slap their computers waiting for iron condors to land, but it's a great way to still be in the market, especially through a binary VIX combined with some low VIX. Exactly. Yeah, they develop slower than the strangle type positions, the naked positions, but at the same time, I think that's why Karen, got smacked up. If she'd have been in an iron condor, she'd have been much better. And we're seeing James kill it with the iron condor. And I think in a low volatility environment, we've already shown y'all the risk from the analyze tab is from the increase in volatility. It's not from the movement of the market. The volatility is what's going to get you down 41,000 on a $35,000 account. Boom. It looks like 22, but no, it's not 22. It's 41. We go back to ES. Go back to ES and we go here. ES, look at this. $2,300 down. And with volatility, you're $2,700 down. Wow. It just makes sense. It just makes sense. All right, good. And that's what I may do. If I didn't think I'd bore y'all to death, I'd do it now. I just close out some of my nakeds and put on some iron condors, but y'all don't want to see that. Ain't nobody got time for that. So, Anyway, I'm excited about it though, because last night I'm laying there and I'm going, oh my gosh, that's how Karen probably got in trouble. It was probably the volatility, not the movement, not the market movement, it's the volatility. Had she been defined risk, she'd been much better. Really believe that. All right. Anyone got anything else? We bought T-bills. We closed a couple positions. We managed some stuff, and everything looks really, 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 really good. All right, guys. I hope y'all have a wonderful, wonderful day. I will see y'all tomorrow. I love you. Tomorrow.